The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 22nd, the fabulous, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you are listening at the normal time frame slot, thanks so much for doing so. We'll try to make today's show as pertinent as we can for you. And if you are listening live, we would love to hear from you. You can give us a call at 877-927-6648. If you're listening live between 8 and 9, and you can't call in, but you've got a question, you can send me an email. Send that off to steve@tfnn.com, and inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we got starting our day with a little bit of red on the screens out there. How about that? You got the S&P off 9 points, the NASDAQ down 57, the Russell is off 5, and the Dow is down 44. In Asia last night, it was a bit of a mixed bag. You had the Hang Seng off 360 points. The Shanghai was down 30. The Nikkei is up 72. The FTSE has really been on a roll the last couple of days in a big A to B equals CD to the upside. It's up 40 points as we speak right now. The DAX is off 22. We're going to take a look at the DAX for sure. You've got gold, silver, copper, platinum, palladium trading the downside. You've got light sweet crude up 16 pennies. Natural gas is flat. If we take a look at the U.S. dollar, it's anything but flat. So let's go do this here. Let's take a look at my 9-panel market update chart, just to give kind of an overview of where it is that we're looking at things. So yesterday, the ES Mini actually confirmed a Rhodes Momentum Indicator top. It's a bearish shooting star candle that formed out there. So we do have a top inside of the ES Mini. In the case of the spot volatilics, it's trading below its 50-day exponential moving average. Right now, it's trading above yesterday's high. So that could be signaling we're getting ready to see some type of retracement here. The NQ yesterday also forming a bearish shooting star candle. That confirms a Rhodes Momentum Indicator top for it as well. Now, what you see here are the next levels of support to the downside. We're not taking a look at the oscillator and change line because I don't have that in this black background screens. So you can take a look at the top of the profiles. Those will be the levels of support on any move lower. The ES Mini, that's at 52.57, the NQ 18.158. In the case of the U.S. dollar index, you can see right now we're trading above 103.81. It closed today above 103.81 is going to trigger an A to B equals C to the upside. There is a level of resistance that price has got to get through in order to make that extension up to the 1-to-1 level up at 104.69, and that's going to be the top of the weekly profile. So the next key area of resistance, which in essence the dollar is trading into as we speak right now, is at the 104.19 level. We've been up to 104.13 today. So that's close enough for Stevie. So watch that. If we see price close above 103, 104.19, 104.20, we're likely to see more than a 1-to-1 A to B equals CD to the upside for the U.S. dollar index. Well, if that's the case, the TD9 count top that's been in place here for about 2 weeks, week and a half at least for Goldilocks, is still in place out there. In order for that pattern to get negated, you need to see a close above 22.03. Short of that, and if the U.S. dollar index does go on and does close above 104.19, we're likely to see gold future contract move down to the 21.09 level. Silver looks like it's on its way to test support, and that's down at the bottom of its profile, and that's at 24.36. Light sweet crude has a sell the D point pattern. Price is consolidating with inside its daily profile. That ranges from 83 in resistance to 79 at support. The natural gas contract. It has a buy. It's got really two buy. The D point bottoms have been confirmed, but it's not even close to being out of the woods. In order to do that, price has got to get back inside its profile. And that's a pretty decent move. That's up at $1.92. 30-year Treasury is printing above yesterday's high, the day before's high. Price tested and rejected a swing point from February earlier in this week. Looks to me like what the 30-year Treasury is going to do is make a run for the 120.23, 121.04 level. So that's just a good overview as to what's going on inside the markets. Let's go beyond this. To go beyond this, let's switch over and go to my white background screens. So we'll do that here momentarily. We're going to take a look at the daily and the weekly equity future contracts and see if they come into sync today. What's Stevie mean come into sync? Well, right now, if this were to close, the ES mini on a weekly basis would negate its TD9 count top. In order for that to not occur, price has got to close at day's end below 52.57.25. If it does that, then we'll have a daily Rhodes Momentum Indicator top, and we'll still have that weekly TD9 count top. So 52.57. 25 is the level to be watching today. In the case of the NQ, we've been waiting for a topping pattern out here. You got that bearish shooting star yesterday. That confirms a Rhodes Momentum Indicator top. At this stage here, unless there's a rally, right now it looks like the TD9. So it looks like the NQ's got both the daily and the weekly topping signal. The weekly, if there were to be some type of rally at day's end, and can't rule that out, a close above 18. 691.25 would negate its TD9 count top. If we take a look at the Dow. The Dow here is going to need a real sell-off. Why? Because its TD9 count top on its weekly basis is up at down at the 39,767 level. We're at 40,176. So if the Dow closes above 39,767, Dow equity future contract, that is, it's going to negate that TD9 count top. And we do not have any kind of a topping pattern inside the Dow. We did trigger a TD sequential count 2 days ago. That's going to require a close below the close of the bar 4 bars earlier to confirm that. Not likely to unfold today. And the Russell 2000 still maintains its TD9 count top. That TD9 count top was formed on March the 8th. Now, in the case of its weekly time frame chart, it does not have any kind of topping pattern whatsoever. We are trading with inside its profile, but that alone is not a top. So we have our mixed messages out here when we take a look at the equity future contracts and the both daily and weekly. Let's move beyond this. Let's move and take a look at, so that those of you that have listened long enough know that there's a direct correlation, or there's a directional correlation, a directional correlation between the DAX and the NASDAQ 100. So let's go take a look at it out here, because the DAX was trading a bit lower. But let's go take a look at its charts and see what kind of signals we have. Now here I'm comparing the daily and the weekly charts for the DAX to the NDX 100 on the very right-hand screen. We were taking a look at the NQ, so we're looking at the future contract. Here's the cash indices. And the cash indices out here, the NDX 100 still maintains its Rhodes Momentum Indicator top. In order to negate that signal, you need to see a cash close above 18,416.73. If that were to unfold today, the daily time frame NDX would negate that Rhodes Momentum Indicator top. We also see on the NDX 100, we can see its TD9 count top. That TD9 count top on a weekly basis, if we see a close above 18,416.73, that pattern would get negated. Take a look at the DAX now. It's going to go ahead and confirm a TD9 count top this week. Now that pattern could complete next week. The daily time frame, no top just yet. So maybe things are coming into sync, and maybe those sync things are really towards next week. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back home, folks. We are recording this. It's now 8:18 in the morning. If you're listening at 11:18, thanks so much for doing that. We're going to, in that first segment, we were taking a look at the equity future contracts daily and weekly. I've shifted over to the cash indice charts out there. That way I can provide you guys with numbers, so at day's end, you'll understand whether we've got the potential of a market top or not. So we take a look at the cash indices out there. Let's start with the Dow. So the number for the Dow to be watching, it's got a TD9 count top that would be negated if the Dow Cash Index closes above 39,282.28. 39,282.28. Write that down on your pad of paper. If price closes above it, the pattern gets negated, and it suggests that the Dow continues to move higher. The Dow Cash Index does not have any kind of a topping pattern, but a bearish reversal candle today, and you've got Dow futures down right now, 6 points. Well, that's not going to do it. But if the Dow Cash Index did generate a bearish reversal candle at day's end, that would confirm a Rhodes Momentum Indicator top. So if you get the Dow to close below the level that I gave you and generate a daily bearish reversal candle, then we'd have the signs of a top in the S&P 500. It needs to close below in order to not negate its TD9 count top. Hopefully that makes sense. 5189.26 is the number. If price closes above that, the TD9 count top gets negated. If you look at the daily time frame, remember, when we take a look at the ES Mini, the candle formation yesterday was a bearish shooting star candle. That formed a Rhodes Momentum Indicator top. If we take a look at the daily cash index, yesterday's candle was nothing more than a gap to the upside. Now, the interesting thing here, you got the S&P futures are off 6 points, so that's not a big deal. Don't know what will happen in the next hour and 10 minutes. But there is the possibility that you could get a gap to the downside if the S&P cash were to open below 5240.66 and not trade up above it. You'd actually have an island top reversal at all-time highs inside the S&P 500. I'm not saying that's going to happen. I'm just giving you the parameters to take a look at, and I'm sharing with you there is no top on the daily time frame for the S&P 500, where there was for the cash indice. If we take a look at the NDX 100, it still does retain its Rhodes Momentum Indicator top. That would be negated in the cash indice with a close above 18,416.73. The TD9 count top is still in place out there, but if price were to close above the 18,416.73 level, it negates that top. And finally, we take a look at the semiconductors. The semis are going to go ahead and complete their TD9 count top this week. And you can see that so far, prices tested and rejected that oscillator and change line at 47.29. So basically, even though you've got a topping pattern right now, it would be a neutral signal. If, however, at the end of the day, price closed below the 47.29 level, that would not be the case. In fact, that would then tell us that you could see the semis make their move over time down to the 4,000 level. We're not going to go there just yet. If we take a look at the daily time frame chart, there is a sell to D point pattern that formed out here. That was on the trading session of March the 8th. So the semis are certainly showing topping conditions. The NASDAQ 100 appears to be as well, at least as of 8:21 in the morning out there. Of course, cash market has not begun trading just yet. But at least these are the parameters for you to take a look at out there. So I do hope that that helps you out. Let's move from here. And we talked about the U.S. dollar index at the opening of the show. So I want to move over to that because that's going to have an impact on metals and mining. So first, let's take a look at the euro, yen, and the pound. That represents 83% of the U.S. dollar index. So we'll get over to those charts here. Daily, euro, yen, pound. Here we go. So on the top portion, you got the daily time frame. At the moment, the euro is signaling that it's going to go ahead and confirm an A to B equals CD pattern to the downside. All that it needs to do is close below the low of March the 19th, and that low out there was at 1.0834. Your price closes back above it, whether it has not confirmed an A to B equals CD to the downside. But if it does, you can see the one-to-one price projection would get us down towards the 107 level. But look at right now how prices come off that C point to the downside. It is on the left-hand side, so I've maintained that exact same angle of the left side of the C to D area. This tells us the move is stronger. What does that mean? That means that if, in fact, we get that close below that B point, that the euro is likely to do more than a 1-to-1 A to B equals CD to the upside. Well, what would that mean for the dollar? I think we took a look at the dollar. We looked at the retracement, which was less than 0.618, and we said it's likely to do more than a 1-to-1. But we do know on the weekly time frame, the U.S. dollar index does have resistance above. In the case of the euro, price is trading right now below its green oscillator and change line. So the weekly chart tells us it has lost its momentum. And that says just keep your eyes focused on the daily time frame. If we take a look at the yen out here is negated at TD9 count tops from before. Price trade above its green oscillator and change line. It looks like it wants to continue to weaken. That would add strength to the U.S. dollar index. And on a weekly basis, you can see prices trading above that green oscillator and change line. Those are bullish conditions for that time frame. Great British pound confirmed an A to B equals CD to the downside yesterday. It's already attained the 1-to-1 price objective, but again, look at how that is trading on the left-hand side of that C to D. This is going to do more than a 1-to-1 A to B equals CD. It should at least get back to its prior lows, and those are the lows from back on February the 5th, and that's at about the 1.2637. As long as the pound continues to get pounded and moves to the downside, that's going to put strength inside the U.S. dollar index. And when you take a look at the weekly time frame chart, price is trading below its green oscillator and change line. We know that the rally ran right up into the resistance level. At the breakdown level, that was at 1.2873. And so where the pound is headed to is back to those February lows and maybe beyond that. So we have these three currency pairs that represent 83% of the U.S. dollar index. They are all suggesting that the U.S. dollar index is going to get stronger. But what we need to do is we need to watch the top of that profile. If you didn't catch that, that's the top of the weekly profile. That's at 104.19. Stevie says if price closes above 104.19, that A to B equals CD with 104.69 becomes the first price target, and then 105.20 becomes the second. Well, if that's the case, we know about the directional correlation that exists between the U.S. dollar index and gold. And then we know about the directional correlation that exists between the miners and gold. So let's go take a look at its set of charts out here. And all this suggests is caution. If we take a look at the daily time frame, it still has that TD9 count top. And what price is doing, it's testing an area of support, really two areas of support. That's that green oscillator and change line and the center of its profile, 2172. I'd watch that 2172. If we get it closed below that, really, the real level that gold is going to need to close below to suggest a move to 2109 or even worse, 2033, which I think is a likely outcome out here, especially if the euro, the pound, and the yen continue to make their moves out here. The price that gold needs to close below, the gold contract, would be below 2149.20. If we see it close below that, it's curtains. Those curtains ought to take us to 2109. That's a support level, the bottom of that daily profile. On a weekly basis, gold's not too bad. It still has an A to B equals CD to the upside, but price is back below or maybe below that B point out there. I'd watch that 2171.50. If we close back below that, at day's end, just adds more to the idea of a further retracement. Silver is just consolidated with inside its daily profile. It has support at 24.36. And the GDX yesterday ran right up into resistance at that TD9 count top. Now it's testing that swing point. That swing point had volume of 24 million shares. It was tested yesterday with 34 million shares. So that says that at least this swing point should be tested. All that means it doesn't necessarily have to be the high. It could be the high. That's at 30.49, or maybe it's just simply the low, and that's down at 29.73 out there. So just be careful. Watch the U.S. dollar index. Watch those currency pairs, the levels that I gave to you, and then you can kind of make your assessment as to what action you should take, if any. Steve Rhodes with TFNN. Good to be with you early in the morning. It's 8:26 right now. If you're listening at 11:26, thanks so much for doing that, and we'll be back in just a few.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's take a look at some charts out here. Let's take a look at FedEx. FedEx out with the earnings, I believe, before the bell. Right now, let me take a quick peek out here. Right now in the pre-market, you've got FedEx, 511 shares, 294 buckaroonies out there. So there's an A to B equals CD pattern. This pattern was confirmed yesterday, so before the release of earnings. The B point was past yesterday's volume, 4.9 million shares. The B point had volume of 1.9 million shares. So he had a confirmed A to B equals CD. That 1-to-1 price projection, well, it's going to blow right through that. The 1-to-1 would only got you to 275. Again, it's trading at 294 in the pre-market. Don't know where it will trade once the cash indices open, but if we take a look at the weekly time frame chart, this is going to be one gigantic gap to the upside. If it in fact closes above 285.53, 285.53 is the Rhodes Momentum Indicator top. It is the TD9 count breakdown level, and if you close above that, that suggests we move higher. If you look at the monthly time frame chart, the monthly time frame chart had resistance, the profile resistance at 270.95. So Federal Express is truly on a tear. We'll see if it holds those gains at day's end. But where's it headed to next? There's actually a monthly A to B equals CD to the upside pattern out here. Take a look at this one. Actually, what I'm going to do is I'm going to do it off my screen. I can give you the price projection level out there. That's going to be easier for me. So give me a moment if you would, and then I'll come back and just show you kind of where we're at. So I would, the A to B equals CD and FedEx on a monthly basis, 353. So I'll just draw it in just so you can see where where I've started with the A point, the B point out here, and then we just simply cut, copy, paste in the symbol. So let's do that. Let's copy it. Let's paste it. Let's assemble it. And then boom, out there. See, Stevie is an amazing CPA. So that 1-to-1 price projection on the monthly time frame, 353.72. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's take a look at the charts for Nike. They're out with earnings as well. They're trading right now in the pre-market down at about 95 level out here. So we take a look at Nike. We never got a bottoming pattern out here on the daily time frame, and it's going to gap to the downside. It looks like it's going to take out its recent lows. So the lows that came in, I'm talking about from March the 6th. That low was down at the price point of 97.06. We're trading at $95 right now in the pre-market. The next area of support on a daily time frame is 93.73. That's a TD9 count breakout level. On the weekly time frame, it's 95.92. We're trading at 95, so we're trading below that. Don't know if that will hold that day's end, but I'd watch that 95.92 level. There's no bottom there, but it can be a bottom getting back to the breakout level. Price closes below that. Then it's likely to target the swing low from the week of September 29th. There were 75 million shares that traded hands that week. So far in the week, we've done only 38 million shares, but today could be a big volume day. On a monthly time frame, 84.11 is its breakout area. So we're still trading above that. And its TD9 count bottom is at 82.22. If price were to close below 82.22, that would be very troublesome for Nike. Could actually even generate a very large A to B equals CD to the downside. So that's what I see when we take a look at the charts for Nike out there. Alton writes in, would like to take a look at Occidental Petroleum. OXY is the ticker symbol out there. And give me 1 second. I need to do one thing here. Okay, Al. Yeah, thanks. I appreciate that. Okay, so we take a look at Occidental Petroleum. So Alton, Occidental Petroleum, let me see where this is traded in the pre-market. It completed a TD9 count topping pattern for its daily time frame yesterday. Right now, trading out at 63.96, so there's nothing large or anything like that. So what you want to watch is, first you want to watch yesterday's high. If price closes above it, it tells you about a strong upward momentum move for its daily time frame. So the first level to monitor is 64.30. If price closes above that, again, it negates that signal, says we continue to motor on. Short of that, price should pull back and test 63.04. 63.04 is the daily oscillator and change line. If price were to close below that, its next downside target, this is Occidental Petroleum, would be 60.28. That's the message of the daily time frame. The weekly time frame says as long as price remains above 62.61, that this wants to continue to move higher out there. In order to move higher, so interestingly enough, is that you've got a TD9 count top that completed on a daily time frame, and on the monthly time frame, prices stopped right at resistance. That's that oscillator and change line, and that's currently printed at 64.12. So we have our parameters. It's a top. We'll take a look at a short-term time frame chart, see if there's a top there. Again, a close above 64.30. It's all out bullish and starts to go tackle its highs, the most recent highs from back in September. And those highs could be up at the 67 level. If we look at a 30-minute time frame, when something forms a top on a daily time frame, what we like to see is some type of confirming signals on the intraday. Rhodes momentum indicator signal is present. Nothing that has been confirmed as we speak just yet. So I don't have anything here to really help. But keep your eyes out for Oxy and both that high as well as from a support standpoint, that $63 level. So I hope that helps you out, Alton. As always, thanks so much for the request. I believe there was a request from Marcus in the Tiger's Den to take a look at Bitcoin. If there wasn't, well, sorry about that, Marcus. We're going to do that anyway. So take a look at the April contract here for Bitcoin. With the exception of the weekly and the monthly, those have got the continuous contracts up. On the daily time frame, this has a Rhodes momentum indicator top. Again, we're looking at the April contract. Price is trading below the bottom of its daily profile. If it closes below that today, that would be the second consecutive day. And what this would suggest is a move down to its breakout level. That's at 52,080. That's what the daily time frame chart is communicating to us. The weekly time frame chart says that there is support at 58,941 or thereabouts. So you're not getting to 52,080 unless we see a close below that weekly oscillator and change line at 58,941 on a 30-minute time frame. So here's where you really get the test. As we come into the 9 a.m. time frame, 20 minutes from now, you're going to get a confirmed, or it appears you'll get a confirmed TD9 count bottom. Now, that pattern will complete at 9:30 out there. So what you'd be looking for to see if in fact this 30-minute time frame TD9 count holds and you see some type of rally. Maybe that rally just simply gets you up into the 65,983 to 66,190 level. So that's what I see when we take a look at the Bitcoin futures out there. I hope that helps you out. And as always, thanks so much for the request. Let's go out to Mr. Z in Philly. John, thanks for calling and thanks for holding. How are you doing this morning?
Just as well as you, Steve. Thanks for doing the show.
Yeah, my pleasure. So you want to take a look at the 30-year out there. Your thoughts? What are your thoughts on what it's doing, and how can I help you?
Steve, let me rudely interrupt. Apologize. One follow-up question to what you just had to say on Bitcoin, please.
Yes.
First observation, then question. At 73,000, the high made last week on Bitcoin, and then it's moved lower. The monthly chart shows a failure pattern, potentially.
Yes.
November 2021 was 69,000.
Yes.
This month, the high 73,000. We're now back under. That is a potential failure pattern.
Yes.
I ask you this very question, and it would simply be your answer would, I'm sure, only be a wild-ass guess, excuse the language.
I love it. Yeah.
Is this a rally failure and a major top? Or, alternatively, is your guess this is just building cause, if you will, in advance of going decisively higher later?
So great questions. Let me see if I can answer them. So first, John covered the double top, so possible failure out there. We took a look at the monthly time frame chart. And what I've got up here are the Bitcoin future contracts. So we've got that as a possible topping signal. If we look at the weekly time frame chart, at the moment right now, John, we have a three-river evening star candle formation. So we can clearly see the A to B, the B to C, and then the C to D level. So that was certainly more than a one-to-one expansion. So you could have a topping pattern at day's end on the weekly time frame. Now, what that would suggest, I'd have to take this one step at a time. What that would suggest is they move back to support. And for it, it's around, on the future contract, around the 58,960-ish level. So I'd watch that on any move lower. So you potentially have a monthly top. We clearly see at the moment a weekly top, and the daily, as we already covered, has a Rhodes Momentum Indicator top out there. So when you get three tops like that, yeah, that can have some meaning for sure. But we have to just take this one progression step at a time. So the first level, 58.9-ish, 58.950, somewhere around there. And then below that, if price were to close below that, we'd be looking at a move to 52.080. Major top, boy, that I don't know. But I do know when you get topping signals on all three, that can turn into a major top. Yes, absolutely.
Very good.
Did that
Thanks
answer
for that elaboration, Steve. I appreciate that.
Okay, yep.
Parenthetically, I just have to say once again, and I say this endlessly, but kudos to every one of you at TFNN. I will just share deep history. It was back in 2013 when David White was a TFNN member. David gave a very lengthy and detailed tutorial on what Bitcoin was. And back then, the price was in the range of $600 to $1,000 per coin.
Yes.
And for me, that was pivotal education that has helped me understand what that is, and given me enough information and education to trade that instrument since. So, and without that, I never would have been involved. So, once again,
cool.
Kudos to every one of you at TFNN. I appreciate that.
Yeah, well, and we certainly missed Dave. Last Sunday was the anniversary of his 1 year passing. So thanks for bringing him up. You want to take a look at the 30-year Treasury?
Yes, Steve, I'll listen to your answer offline.
Sure.
You will see in the Tiger's Den, I just posted a trade action in the bond futures. My question to you, sir, looking at the weekly, daily charts, can you share with us where your best guess is that June T-bond futures contract is going, please? And I'll thank you in advance and take the answer offline.
Okay, so what I'm going to do here is I'm going to switch screens, and thanks for the question, John, because what I have, folks, is two different sets of profiles. So you'll see right now this shows 120.71, so 71% of 30 seconds out there. What's that? So about 120, 21, 22, 23. Okay, and that's the top of this daily profile. So we're trading, and we're still on my white background screen. I'm going to switch here momentarily. So we had a TD9 count top. Price took us back to a prior swing point. That was a swing point from February 22nd. Price tested and rejected that level. And this shows a bullish reversal. This shows a bullish structured profile. When you close above, and if it does close above the center of this profile, which suggests that move up to the 120, let's call it 120. 23 out there as that price target. So that's what these white background charts are suggesting to us. Now, before we move on, I just want to take a look at the intraday charts out here. Do we see any kind of a topping pattern? And the answer to that question, I do not. In fact, on a 5-hour time frame chart, John, a TD9 count top is getting ready to be taken out. That was formed at 5 p.m. back on March the 20th. Now, we are in bar number 8 of a TD9 count, but these TD9 counts need bar number 9 and then the bar following bar number 9. So the 5-hour time frame chart is suggesting that the 30-year Treasury should rally up towards that 120.104 level. I know you follow the TD9 count sequence. You can see on the 2-hour time frame, there's a bar number 9 is going to complete. By the way, this 2-hour time frame bar completes at 10, and then the 12 noon would complete this pattern out there. So we could be getting, so the answer to my first question is going to be likely rally up towards that 120.23 level, but that's a daily time frame chart. In intraday, there may be some stops in between out there. So I'd watch the 5-hour, I'd watch the 2-hour time frame chart because of those topping patterns. Now, when we move over to my white or the black background screen, give me a moment. We'll do that. What you're also going to see is, I'm just going to simply expand out the chart. Here you'll see the test and rejection of the swing point. That was from February 22nd. So clear test and rejection of that level. Here we can see that price is trading below bullish structured profile. On a counter trend move, John, where price would find resistance would be between 120.23 and 121.04. So that's where I believe, at least at this stage here, that's where the rally is going to head towards. Again, not necessarily today, based upon those intraday signals that we were looking at. If price can close above 121.04, that would suggest that this is more than a counter trend move. And then that gets us up to its TD9 count top. That's also the top of the profile on the black background charts, and that's up at 122.13. So that's where it appears to me that the 30-year is headed to. Again, watch, the 10 o'clock time frame out here. Just watch intraday on the 2-hour and the 5-hour time frame charts, and you are most welcome. And thank you for the call. Always great to hear from you and from everybody out there. Always love to get the calls. Let's go on to our next request that came in. That's from Bob in Spokane. He would like to take a look at ticker symbol ARWR. I'm going to do my best to get to that chart and change the screens. I know I'm still on the black background screen, I believe, but we're going to change that here momentarily, and we'll take a look at ARWR. Get that up on the screen. So we take a look at this instrument. What do we have here? So even though you see a TD9 count pattern, it really wasn't a TD9 count bottom because the low came on bars number 7. And that really doesn't qualify for Stevie's work. What you can see is the rally so far ran right up in that red oscillator and change line, 29.23. Let me see where this might be trading in the pre-market. ARWR. if it is trading in pre-market. Its last trade fired off at $28, 28.04 to be exact. So the first level, if you are long this instrument, Bob, is you really want to see price close above that daily red oscillator and change line. If it were to do that, then you would have a battle up at 30.52, the top of its profile. That's the level that price would need to close above to generate a profile change in trend signal. If we look at the weekly time frame is in trouble. It's trading inside a swing point from the trading session of December the 1st out there. Now that swing point, the high of that swing point is something to watch. Why? Because if we close below it, it adds to the idea of going down and testing that low. The low, by the way, is at 20.67. The high is 29.48. Well, if we close below 29.48 today, again, it would be the second close inside that candle. So volume on that candle was 12.6 million. Last week, price moved in it with 10.5. So far this week, we're only at 4.3. So we're moving into it with lighter volume. Well, what that says is that if price were to close above that swing high, and that, again, is 29.48. Then you'd have a test and rejection of a swing point, and that could be a bottom signal out there. Short of that, it looks like it wants to continue to head lower. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So did Kentucky let anybody else down yesterday? I'd watched the last couple of games out there, and they definitely seemed a little bit weaker than in the beginning of the season. At least I thought so. And boy, that didn't totally bust my bracket out there because I didn't have them going much beyond the next couple of rounds out there. I think Arizona, is it Arizona that might be the other side of that picture out there? Anyways, it was a good game for sure. Hey, let's take care of our last couple of requests out here. The first one coming in from LB wants to take a look at SMR. So this has pulled back to a key area of support, which is the bottom of its profile. So you're going to want to watch that, LB, today. A close below 458. And it closed yesterday at 457. So a close below 458 would be 2 consecutive closes below the bottom of that profile. And that would bring into play the $2.56 market out here. One heck of a candle on a weekly basis. I mean, this has been just a waterfall cascade. So you got 256 is one target, 357 is a target, 320 is another target out there. If you take a look at, we talk about it when a profile forms above price, how that's a bearish message. And look at the monthly time frame chart. That had formed above price 2 months ago. And take a look at this monthly run, this weekly run that we had. Got right up there and just rejected it. So looks like you're headed for lower price out here. Let's take a look at the last request. This is from Satish inside the Tiger's Den. Wants to take a look at PSX. So PSX, Satish, completed a TD9 count top. It did that earlier in the week. You've got a consolidation with inside its profile. If price were to close above on a daily basis, 159.74, it negates that signal and says that we continue to move higher. I don't see any topping pattern on the weekly time frame, but the monthly says at the end of the month you're going to have a confirmed TD9 count top. That pattern could complete next month out there. So watch the highs on PSX and also watch support, which is at 152.98. Folks, thanks so much for joining me earlier. If you're listening in live, thanks for joining me. If you're listening live, if you're listening to the recorded show, thanks so much for doing that. Please have a fabulous and fantastic weekend. I look forward to seeing you on Magnificent Monday in honor of David White. So when you can, not when you have. Take care.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Sharpening your skills as an investor